Good morning, Carolyn. Good to see you. Hope you're doing well. Some nice sunshine over here in the Midlands today, which is nice. Just going to give folks a little bit of time to step on in, and then we'll get stuck in. Oh, that's good. Main thing on the calendar today is this JOLTS jobs data looming at 3. That's most likely to influence the dollar and equity markets. So we'll do a little cover on that. Just going to wait 30 more seconds and then I'll do a quick run through. Check that everyone's getting on okay. Hello, Ashok, good to see you. Then folks, let's get stuck into the session. So coming up today, the main data is the JOLTS job openings coming at 3 alongside the consumer confidence at 3. We've got Collins speaking now as we speak. I'll just check that, make sure that my squawk is on. That squawk is on. So that's the main things to be looking at. We've also got another Fed speaker coming up later in the session, and that is coming up at 6:30, and that will be, let me just check my other calendar, Goolsby at 6:30 UK. So that's a sort of major risk. The market chatter at the moment is that the prospect of a US government shutdown is looming. That's benefiting the yen and weakening the dollar at the moment. So if we just take a look at currencies, we'll just talk through them. So the yen's gaining on two things. The dollar weakness and safe haven bids are finding the yen attractive. Plus, we had the summary of opinions out last night, and there's a slightly more hawkish stance developing. The Bank of Japan just indicating a sort of calm with the current tariff situations and hikes, and seeing the need to keep hiking interest rates. So it's not a massive shift, but just a slight bullish undertone. That's supporting the yen. The Aussie dollar is firm, pretty much what was expected with the RBA. They've had some higher than expected inflation, and that's what the RBA stressed. And so the Aussie dollar is benefiting from that. So intraday, Aussie US dollar buys make sense, and dollar yen sells make sense. Obviously, that's going to change with the JOLTS jobs data that we've got being released shortly. If you take a look at the currencies, where are we? Euro dollar.
And just note, for the crypto watchers, the information as a report, SEC moving to allow stocks to trade like cryptocurrencies, staff developing a plan to allow blockchain-based stock trading, Coinbase supports the exemptive relief, Citadel opposes it, tokenized stock volume reached some $465 million, up some 136% in the last 30 days. That's according to the information.
Right, euro dollar, I've just bought my stops underneath the today's lows. So I've just brought my stops up to there, and if I get hit, fine, I'll be knocked out. Otherwise, I'm going to try and hold it for a break of this mother candle. So just leaving it there. So I'm trailing stops, ideally wanting a break at this level. But I've just got my stops underneath the daily low for my euro dollar longs. I've also got dollar yen shorts running. Let me just try and find that. Should be on this chart. Yep, there it is. I've got those dollar yen shorts, which I've got running at break even now at that sort of 149.50, 60 level. So I'm just keeping that there. The prospect of US 10 yields continuing to move lower is not unreasonable, particularly if we start to see some weak jobs data this week, and breaking down back into this structure is a sort of false break of that symmetrical triangle pattern. And then maybe I can get down as far as this 142, 143 region. So I am expecting the dollar yen to move lower. And seeing that earlier on Friday, just all looked a bit overstretched. And so that was the right time to sell dollar yen. And again, I'm going to trail that with some political developments coming out of Japan as well. So I'm just got them both at break even and see what I can get out of them. The JOLTS jobs openings, they're expected to come in, I think it's 7.2 million. Let's have a look. Yeah, so expected to come in about 7.185 is the consensus. 7 million is the low. So what we're looking for, you can see that jobs in the US has just been slightly weakening. Now this is a forward-looking indicator. So it's just sort of saying that if the US economy is advertising less jobs, that shows a weakness in the job market that's sort of coming along down the line. So it's a forward-looking indicator. And then we've got the ADP jobs coming tomorrow, and then we've got the NFP on Friday. But if there is a US government shutdown, then non-farm payrolls won't be released on Friday. So remember that dynamic. A government shutdown is broadly dollar negative at the moment. So that's partly why we're seeing this dollar negative story come in a little bit more strongly. The next thing to accelerate it would be if this comes in lower than markets are expecting. Beneath 7 million, then expect more dollar weakness, euro dollar upside, dollar yen selling. So that's what to look for. And then a weak labor market, I'd expect it to initially send stocks lower, and then stocks should be bought on expectations that the Fed's cutting interest rates. But I've got to be careful with the stock reaction, because sometimes markets look at it and say, oh no, the US economy is slowing down, that's bad, and that's going to hit companies' earnings. Sometimes the market looks and says, oh, the US economy is slowing down, that's good because it means the Fed's cutting interest rates. And it's a little bit, it's hard to always tell how the market's going to react to it. So you just got to be flexible. The other data that we had out this morning is inflation data out of Europe. It is slightly firmer. Nothing to really change the dial, but on balance, it's euro positive with a slightly firmer European inflation out of Germany. Not a big surprise. It's not going to change the ECB. We know the ECB are done with cutting interest rates, and this really just sort of confirms it, that they're not going to be cutting interest rates anymore. And they should stay at that level, which just should support that euro dollar buy bias that's there medium term. So calendar, JOLTS jobs, consumer goods at 3, and Fed expected to cut interest rates twice. Looking at stocks ahead of the open, if we just go to the 15-minute chart, and we just hit the TPO, what we can see is that price is opening up within the Globex balance. So we're within the balance of Globex open. We've got some fair value gaps sitting underneath and some fair value gaps sitting above. So buyers are in control right now. Got the value area low sitting here. Looking at the hourly chart, you can see that buyers are coming and trap sellers down at this level. So buyers are in control at the moment. This is the weekly value area high and the developing weekly value area low from this week. So we're in major support. Just like yesterday, we found support and dip buying. We're finding support and dip buying, and buyers are back in control. Globex open, the delta is positive. So we're leaning positive to start the session. Looking on the 15-minute chart, you can see that buyers have come in on volume, right? And trapped these sellers. The sellers have been trapped here, and they're trapped against that VWAP. So with the delta being positive, looking for buyers against the VWAP or against the first standard deviation, or even the second standard deviation at the open makes sense. So I quite like that for the open. And you can see 5-minute here, sort of strong buyers coming in. And then on the VWAP,
update concerning OPEC Plus to consider bigger November oil output increase of 411,000 barrels per day at meeting on Sunday. This according to 2 Reuters sources. OPEC Plus could consider an increase of as much as 500,000 barrels per day for November. Okay,
that's been weighing on oil, that sort of extra production increase for the OPEC Plus meeting, but markets sort of priced that all in, so nothing really moving at the moment. So here we are. What do we see?
More from Fed's Collins says inflation risks remain and Fed should focus on both sides of the mandate.
We're opening up inside the balance of yesterday. So market is balanced. We can see buyers coming in from late European session, and you can see here buyers are trying to trap these sellers against these levels here, right? So on this level, on this level here, you can see that buyers
are not laying out a preset path at the September FOMC.
Trapping sellers there. So what I could look for at the open is if I see sellers getting trapped against here, then look to go long, okay? So that's what we're looking for. Right, okay, let's just look at this. So on the hourly, it just highlights the first hour. Yeah, see 2:30 to 3:30. You can adjust it, but that's the time to use. The initial balance is the time to use, which is the first hour which we're into. Okay, here we go, 15 minutes, sellers coming in. Right, now, if sellers trap these buyers, then the market's saying we want to go back down and test some of these lows. Let's see what we get. At the moment, buyers have trapped sellers. Got the 5-minute rejecting that level. Buyers coming in. If we go up above these sellers, then I'll take that. There's a little long. VWAP holding it for now, right? So here's the fit 15, 19 seconds to the open. Buyers are still there. The VWAP's trying to hold, and you got buyers coming in, right, trying to close above these sellers. Now that should be bullish. Now ideally I want to see some sellers come back in and then buyers come back in over them. All right, so now we're coming back down on the tick chart. I'm going to enter there along. You got buyers coming in, trapping those sellers against that level. Quite a lot of volume there as well. Here come the buyers. That's strong buying in. Here we go. So that's it, a bit more. We're still in this fair value gap, so I'm still holding on these longs. All right, another long.
Just more commentary here from US President Trump says have to get Putin and Zelensky together.
Sellers trying to come in here. Got this nice value area. It's a fair value gap. It's trying to hold, but we'll see if it manages it.
Now getting initial remarks from Bank of England's man. It says we have a lot to do a lot more work when inflation expectations drift away from the 2% target.
Okay, trying to break out of this level, hitting a fair value gap.
Strong equity markets boost household wealth and avoid consumption.
Still a nice sort of support area here. So it wouldn't be a bad area to potentially look for buyers to come back in.
Just making you aware, in about 10 minutes time, Chicago PMI for September is due, expected to rise to 43 from 41.5. And BOE's man just continuing says we are way above target on inflation and we have been for a long time. Trump just talking to military leaders in the US says US 25 years ahead of Russia and China on submarines. And BOE's man believes inflation persistence scenario is playing out.
So the sellers have trapped buyers here. We are in this big support area, so it's not a bad area for buyers to step in. Let's see if we get them.
And US President Trump has sent Submariner 2 to Russian coast after being threatened by Russia. Bets Collins says it is still early days on how tariffs will play out. Trump says submarine is just lurking, sure we will not have to use.
In this big support area here, and this is where we got those sellers come in, you see. Got trapped by these buyers, so I'm expecting this to be a support area. Let's see if we can trap some of these buyers down here. Hey Najam. No, Najam, you haven't missed anything. Just an initial, we're looking at initial balance.
Man says, does not mean that I have no rate cut on my horizon.
And we've got the consumer confidence and the JOLTS jobs coming up at 3, so we've got 20 minutes to that. Just sat in the support area. I'm sort of long, looking for some support to materialize here.
Further from BOE's man says, I voted for reduced QT pace because I do not want a whole lot of action happening in the middle of the curve. BOE's man thinks that they are closer than people think to the sloping end of the reserves demand curve. BOE's man favoured the same amount of sales in each duration bucket for QT.
Yes, Osha, I'll give you a book recommendation. It's called The Art of Currency Trading by Brent Donnelly. The Art of Currency Trading by Brent Donnelly. I'll give it to you in a minute.
Now approaching just over 1 minute to 15 minutes to the top of the hour. We are expecting Chicago PMI data for September, expected to rise to 43 from 41.5.
Right, just gonna
10 seconds.
let me just
40.6 beneath expected 43, comes in beneath the analyst forecast range as well.
Now if we look on the 15 minutes, we see that these sellers are now trapped against that level. So looking for buyers against the VWAP makes sense. So if I can see the sellers get sort of trapped there and the potential move upwards does make sense, but thanks, Najam. Good tip for you there, Osho. And you can see buyers on the 5-minute trapping sellers. So the buy bias is back and alive, and looking for buyers against that region there makes sense. But notice the delta is negative, so I'm not buying in here, and we've got the data coming up at 3.